Okay, hello traders. Today is Wednesday, September 14th, and I'm Michael Boutros. Welcome to this live intraday strategy webinar on SB Trade Desk. Adam, Eileen, good morning to you. Happy Wednesday. Conwall says, good morning, Michael. Thank you for your guidance. It really helping us on all aspects of trading. I appreciate that, Conwall. Cheers, mate. It's a pleasure to be with you guys here this morning. So, there's a lot to go over. I do want to cover, obviously, dollar CAD, Kiwi dollar, Euro Aussie from yesterday's update. I'm still looking at Aussie dollar. Haven't taken anything yet. It's kind of stalling here, so I'm looking for a little bit more of a confirmation. Sterling looking a little bit lower, possibly a dip into the monthly open for a possible long position. Obviously, we do have a lot of data on tap, so just a quick headline before we get into any of the setups, guys. We have oil inventories today at 10:30, so do keep that in mind. Crude inventories are expected to show a little bit of a rebound here heading into the U.S. trade session, so that is released at 10:30. We'll be watching implications for crude and dollar CAD. Tonight, you get the Kiwi GDP numbers from New Zealand. Expecting to see a really nice bounce back there, so we'll take a look at the Kiwi. Obviously, guys, keep in mind the rate decision for the RBNZ is on tap next week right after the Fed. So it's likely to be a pretty big day next week for Kiwi dollar. The BOE is on tap tomorrow morning. They're expected to hold pat with policy, but certainly we'll take a look at the sterling price action. And then obviously heading into the end of the week, tomorrow you get retail sales from the United States, but on Friday, those CPI numbers will be crucial heading into the FOMC policy meeting next week. Quick reminder also, guys, for you guys in the room that we do have our midweek strategy webinar on tap later today at 1 p.m. with Jamie Setley. So definitely stay tuned for that. All right, now that we got the housekeeping out of the way, let's jump right into the charts. So keep your eye on the economic docket. Like I said, for today, really the 10:30 slot's the only thing we need to keep in mind. We'll be watching dollar CAD on this release. Kiwi data later today. I mean, look, they're expected to see a really strong rebound, okay? 3.6% year on year from a 2.8 clip last quarter. Do keep in mind, again, they've had concerns actually in overheating in the housing market, which may be sort of contributing to the GDP release we're expecting today. But with where the Kiwi is, there's still a near-term resistance. I'm looking to maintain a bearish invalidation level, and we'll take a look at that in just a bit. Relative performance for the U.S. dollar heading into the New York trade session looks like this. Kiwi is actually the top performer, a nice little rebound in overnight trade, still holding below resistance at 0.29% to the upside. Biggest loser, Japanese yen, down 0.22%. You did see a nice little rebound there in dollar yen as well. Pretty much lackluster across the board here, and like I said at yesterday's update, guys, you're likely to see the dollar pairs really start to be a little bit more boring, I want to say, for lack of better words, as we get towards the CPI print. CPI is going to be paramount, especially because it's right ahead of the FOMC interest rate decision. And of the Fed's dual mandate of price stability, which is inflation, and maximum employment, which we're pretty much there, inflation is the laggard. So the CPI numbers for Friday are going to be important as it pertains to the Fed's decision next week. And we are looking for the consumer price index to see a slight uptick on the month-on-month and on the year-on-year. Okay, so that's supposed to uptick to 1%. The most important read is going to be the core, and that is expected to hold at 2.2. Okay, that's on Friday. So keep that in mind. Eileen says, when's the CPI pre? Yep, Friday, you got it. Yep. Tomorrow we do get retail sales, which is always going to be a very good, gauge on consumer spending. Retail sales are actually supposed to be a little bit lackluster month on month. If you go to the ex-auto and gas, more of a core read, you are expected to see an uptick. So a little bit of a mixed read expected tomorrow. More important is going to be not only the CPI release, but also the University of Michigan confidence surveys. We did see a drop to 89.8 last month. So we are supposed to see a nice little uptick there, back to 90.6. And again, we'll go over this data, guys, again tomorrow before the release to give you a quick update on what the new consensus forecasts are. As it pertains to the greenback, here's what the dollar index looks like heading into the U.S. trade session. So we did get the break that we were talking about, resistance yesterday at 11,960. The final area of key resistance and certainly the level that we've continued to hold as our bearish invalidation level is just higher here, okay? Interestingly enough, you have the 200-day moving average, basic trendline resistance off the highs for the July calendar month. You have the monthly open, okay, which comes out at exactly 12,004. And also within the confines, what we just tagged today, look to the left here, an exact 1618 extension from that initial leg up. It literally caught it to the tick last night in trade. So look, for the dollar index, you're coming in some resistance. I wouldn't put it past this thing to try to push into this region again, maybe fail at the monthly open, leave this cushion of space as our near-term bearish invalidation level. If we get through 12,014, in my humble opinion, that's straight bullish. That's just a breakout type of zone. So I am looking for the dollar to sort of simmer down here on the upside near term while below that 12,000 mark. We'll see if that holds. Okay, so we're looking for some exhaustion here on the greenback. Bear with me one sec. I just want to see what this extension looks like. Okay, I'm going to open up this range to 12,014, 12,019 as well. Two equal legs off of the larger swing here. Gets you 12,019. So this would be the level of which if we broke, we'd want to be buying pullbacks. And for those of you who are thinking, well, Mike, well, how do we play this, right? If we do break to the upside, how do we play this? This is a zoom and retest, it's called, guys. And we talk about this all the time. Just like we were having a discussion earlier last week about trading the turns and waiting for price action to show us that. The breakout's the same way. You don't want to buy the breakout per se. You want to wait for the breakout to break, pull back into support on a retest, and then see that to go long. This is in the scenario, by the way, guys, that this invalidates our bias. All things held constant, I am looking for this resistance to hold heading deeper into the week here for U.S. trade. Okay, any questions on the dollar index? Please, the abomination, your level. Okay, Conwall, definitely take a look at dollar yen. Let me jot that down. Matt, what do you want to look at? Matt says, Mike, when you discuss Kiwi, can you just clarify, do you mean that after GDP release, it's expected that Kiwi dollar will be bullish to the upside? Matt, I'll definitely go over that for the GDP release, you mean. Yep. And that's for Kiwi. Yep. I got it on the list. Okay. So if there are no other questions on the dollar index, look for some exhaustion here as we head into the U.S. trade session. The risk really, the long side is at risk below the monthly open. And like I said, a break above 1219 is what would shift my focus higher. Otherwise, I'm looking for short triggers while in this region. Okay, let's jump into yesterday's update. Dollar CAD was the first thing on tap. Look, sometimes it's better to be lucky than skillful. I actually did clip and a nice little that short exposure I was talking to you about yesterday in the report actually limited right at the lows. I think I limited like 2 pips ahead of the low there. So I did take out profit on that trade. I'll show you that in a moment. And a quick reversal puts us right back at the high day close right now. Not interested in dollar CAD long exposure yet from here. The game plan and the levels remain unchanged, guys. This is kind of messy price action. But at the end of the day, if you get a pullback into support, this is your ideal long position. If you do finally show a little bit more of a strength rally through the July high day close, I'd be looking for a pullback again into 3180 to get long. But right now, I'm not doing anything on this. Let me take a step back. Here's what the daily chart looks like. And this is why yesterday I was in a short position when I wrote that report. You had the July high day close, okay, which is a multi-month high. You had the median line of the current operative formation off the lows that we've been following for well over 4 months. You had the 88.6 retracement at 132, okay, and the highs for August. So there was a lot to look at here. On the near-term approach, you also had just a couple of trend lines that were also stacked up. 31.55 was near-term support. That was the first level of which I took a little bit off the trade. The rest of the trade, I was looking for the opening range high here. And the target that was cited on the report was 31.25, I think, or 23. My limit was at 31.30, so I literally just caught the low there before it turned around. Long story short, for me to get on the long side, that was on the short, I still want to get a deeper cut here. or a more conviction breakout and pullback. So I don't have anything on dollar CAD open as we speak, but I am still, on the lookout for some long entries. Here's what it looks like, or here's what it looked like on the scalp. So you had some building divergence into the highs, okay? On that last high, spike high that we made, that was right here, right into the high day close, okay? 3186. It was a beautiful sort of a beg entry there, resistance again at 16, momentum on the 5-minute chart, on building divergence. So I kind of just jumped into that one with a quick stop against the highs. Again, the initial support target, sorry, my computer's bugging out here a little bit. The initial support target was right here at 31, I can't see the levels, 31.15 to 31.56, this zone right here. So as soon as price came into this zone, I started to clean up a little bit of that position, take a little bit off. You saw a rally, come back, and it started to hold again, momentum holding 40, take a little bit more off. And then finally, before I went to bed, I kind of just adjusted the leverage to where I liked it, stops at break even, limit just above the opening range high, give yourself a little bit of cushion here. Keep in mind that a quarter of the daily ATR is 25 pips. So every time you get 25 pips, 30 pips, you want to be doing something. Okay, and we use this quarter of the daily ATR just as a gauge. Okay, there's 4 major trading sessions throughout the trading day. On average, when I'm looking for an intraday trade, I should be looking for about a quarter of that position. So, it just made sense to clean up the position a little bit before we went to bed. Again, a double the daily ATR would have put you at 50 pips, and that's kind of the rationale rather, of where the limit was, right? Half of the daily ATR, since we already booked a quarter, put us at 50 pips. That was just above the weekly opening range. And again, that's a luck trade. If anything, this would have doubled back and taken me out at break even, which still would have been a decent profit. Okay, now the Euro-Aussie trade from yesterday didn't work out quite as well. We did take a little bit of a profit on half that position, and I'll show you that in a moment. But I just thought it might help to walk you kind of through the sort of process here of getting in and out of these positions. Any questions on dollar CAD? So oil inventories comes out at 10:30, and that could be a decent kicker for the CAD move. Stephen, where did you put and move your stop in the dollar CAD trade? So the initial stop on this, Stephen, was right against the high. So again, after I took the short, I give myself like a 5 pip allowance. Remember, we're looking for a 25 pip gain. So as long as your stop is within that range or less, it's always going to want to be within that range or less. It's a trade that is a viable trade from just a risk-to-reward standpoint. So it came into the resistance level. That's the high day close. I have a trigger in momentum holding below 40. A stop against just a couple of pips. I think it was like 5 pips against 32 there. Was where it was initially was. As soon as we started booking profit here, the stop goes down to break even. So I'm guaranteed, even if the market doubles back, I got my little chunk. It's an intraday strategy, not taking a loss on it. And capital preservation needs to be paramount in every intraday positioning, okay? More so than necessarily, how long am I going to be in this trade? Where am I out? Where am I want to bail on this if it goes against me? And as I noted yesterday in the piece, guys, this was a counter trend, okay? So we wanted to make sure that we were very nimble as far as, not letting ourselves put a 30 pip stop out. You're trading against the trend, so you want to play really close to the chest on these types of moves. Stephen, does that help? Does that make sense? He says, great, thanks. All right, cool. Hi, Michael. Decided to come on board with SB Trade Desk. First intraday webinar for me. Impressive stuff. Hey, Roy, welcome aboard, my friend. It's great to see you in the room. Yep, we do this every morning, Tuesdays through Thursdays here. So I want to welcome you once again. He says, I have a position in dollar CAD from 129. Beautiful. Sweet. I'm assuming you're on the long side, Roy. I hope so. No. That's a really nice entry. Look, he says, yep. Okay, so the only other thing for a position like that, again, I'm going to encourage you, Roy, to definitely jump into the webinar today with Jamie. He's been eyeing this dollar CAD for a very long time. He's going to be a little bit more on the longer term time frames. But from my standpoint here, on my part, I'd be looking for a little bit more of a resistance kickback possibly from 132. I still do like the long, okay? And our bearish invalidate, or our bullish, excuse me, invalidation level, guys, remains the same, okay? Unchanged. I do like the long position while above 31. I would need to see a break sub 30.30, the weekly opening range low, basic trend line support, the median line, the 50 line here, okay? This is the level that would shift my focus back to the short side. Yesterday's short was just a scalp. Intraday position against the highs worked out well. The broader positioning, you're still going to be looking to buy pullbacks here in dollar CAD. He said, should I be doing anything to it now? So Roy, I don't want to necessarily shake you out of the position. From my standpoint, on an intraday guy, as an intraday guy, I'd be looking for a pullback. So Roy, if you're okay sitting out a pullback towards 131 or even 130.30, wouldn't really worry about it. If you want to protect those gains, from my standpoint, I'd be looking to take a little bit off the table here, bring your stop up a little bit, and as long as you hold 30.30, the upside looks still pretty well poised here for dollar CAD. The one caveat I want to note is this. The dollar index, we just talked about it, is also approaching near-term resistance, but it's important to keep in mind that the loonie, the CAD, is not represented in this index. So although we are expecting the dollar index to find some near-term resistance, dollar CAD could continue higher. And I guess we could take a quick segue here. Let me keep track of the order we're in. 2 is dollar CAD. We'll do 3, we'll do oil. Just to keep things sort of in the proper theme here, this is CAD weakness coming into resistance. Here's what oil is doing. The tumble is still the focus here. Yesterday we closed above the monthly open. Remember we were talking about this in the webinar? That's the support structure we need to get through. Today we're trying to make another attempt on a break lower. Conwall, I know you've been following this trade extremely closely. I mean, nothing's changed on this, guys. It looks pretty darn good to me. I still want to stay on a bearish bias, basically still below the 100-day moving average, which is just above the weekly opening range highs. But at the end of the day, near-term targets are still 44. You're still looking for that trend line down here on the near-term approach. Still looks pretty good. So if oil inventories come out and you see a little quick rebound in price for crude, Roy, that could charge a little bit of a pullback in dollar CAD. So keep that in your mind. Broader focus remains weighted to the upside, man. I still like it. I still like it. From a scalping standpoint, I would be looking to shave a little bit off here. But again, keep those levels in view. Roy says, cool, thanks. You appreciate that. Oil levels, please. So the oil levels are unchanged, my man. Here's Conwall. Here's what it looks like, guys. There's no change from yesterday. You're still looking lower below this key region. On the near-term approach, that median line formation that we were following from the lows of the month looks like we're broke it here, and we're checking it as resistance and pushing off. Here's the monthly open finally breaking in purple. So yeah, look for a drop towards 44.07 would be sort of the initial level I'd be looking for, the 50% retracement off the high. Conwall, give me one moment. Let me update this for you real quick, okay? I just want to see what this extension off the high looks like. It might be. Oh. That's beautiful. So look where the 618 comes out. The 618 comes out dead on that 50% retracement again. So that still continues to highlight 44 as a near-term support zone here on the crude decline. On a little bit more of a near-term approach, just off of this decline here, I want to check out a couple of different things. And Conwall, I'm just going off the fly here. Let me just see what this looks like. It looks pretty good. And then the extension off this near-term high. See if we get any confluence. Okay. Not going to stress that. Okay. I hope this chart doesn't look too messy at home. This is the 1 hour. Let me show you the 2 hour chart here. So this is what I'd be looking at, Conwall, near term for for crude prices heading into the oil inventories. Actually, I think the 1 hour looks a little bit better. So you're holding this near-term channel off the highs. Wouldn't really stress it too much, although it's a 3-point touch, and it does look like it's mirroring off support very well. Is there a parallel here? Okay, I'm not going to stress that. But it does keep the focus lower, okay, while below this region here, basically 45.25, near-term support 44. If we get a reversal breakout on oil inventories, let's say we see a big miss or a contraction in inventories, look for a rally back towards sort of the weekly opening range highs, 46. But broadly speaking, I'm still looking for a drop towards 44. And 43 would be an area I'd start to look a little bit more cautiously for support. It's 2 equal legs down. If this is just a correction, that would be an area of which you'd expect to see a little bit larger of a rebound. But for me, my focus is still lower here in crude. Conwall, does that help? Wesley says, hi, Mike. Will it be okay to buy dips in $CAD on crude inventory report later? So, Wes, I don't approach the reports like that per se. I'd need to see what the market does. I don't want to just tell you blindly, yeah, if $CAD dips, buy it. Remember, guys, it's all about the levels. So let me put it to you this way, Wes. If crude inventories comes out and this thing reverses sharply into the monthly open, I'd be looking for exhaustion down here, or the weekly open rather. If it's like a blowout figure and crude prices just like rally like no one's business, a break below here, I'd sit tight. I wouldn't do anything. I'd be looking for support and possible long entries here. I can't, give you a... My crystal ball doesn't tell me if we're going to get a good crude inventory report or not. So on those kind of data prints, you just kind of need to watch what the initial reaction is. All I know is that irrespective of what the report is, I know where I want to be long. And I know it's going to invalidate my bias. And the only thing that will invalidate my bias is a break sub 130.29. Make sense? Wes says, okay, got it. Right on. Conwell says, thank you, sir. You're more than welcome. And I think I'm caught up on the questions. Do you ever take non-scalp trades, Sharif? 100%, my friend, yeah. I don't limit myself to any single... Yeah, I don't just scalp. Scalping is something, or intraday trading. I don't even like the connotation that comes along with that word scalping. But intraday trading is something for me that strategy I developed just over the years, sitting on the trade desk, Sharif, watching retail traders come in, clearing trades, strategic company hedging on open positioning. So for me, it was just kind of the thrill of sitting on the desk for all those years, developing that near-term strategy. But for sure, I will take positions that will not be intraday all the time. I actually have a separate account on that one and take a little bit more of a longer-term approach. So if I do want to scalp against my longer-term bias, it gives me that option. Obviously, for those of you who are trading overseas, you don't have the FIFO problem, so you can still do that on a single account. But Sharif, hope that answers your question. Question here from Sushil says $CAD short around 132.50. So 32.50 is just a decent swing high that I'm looking at. Not necessarily something major key. It actually comes at 32.60, and if you guys read the report from last night, the significance of that level is actually the 200-day moving average, which comes around 32.63. I just put 60 as a scalp target just to keep it on the inside here. But ideally, to be quite frank with you, Sushil, if you're looking to fade the move, I'd be more interested on a stretch towards 32.95. Okay, the stretch high from back here in March, but also because it converges in time on this median line parallel that we were in for a couple of weeks before we broke earlier in the month. So that former slope converges on that 324 high, basically heading into tomorrow's trade session. So if we do break, this is an area I'd start to look for some more exhaustion. He says, thanks. Hey, you're more than welcome. Good questions today, guys. All right, so we got hung up on $CAD for a little bit longer than expected, but no worries. I hope we got all the questions out there. If you do have anything else, feel free to throw it on the message board, but I'm going to try to zoom through these now. Kiwi Dollar is next up on tap. Haven't personally taken any positions on Kiwi. Last night I was more involved in Euro Oz, but here's what Kiwi Dollar looks like. Swing trades, we're still holding a short. No change on that front. I do like this thing still lower below this region heading into the U.S. trade session. That's the 73 handle, essentially. Just keep that in mind. Huge region. And I don't have to remind you, for those of you who've been on SB for a while, you know that we've been watching this region for months. 2015 March low day close, the swing highs that you made back here in June. It was also the high day close for July. Really nice pivot last month. This month coincided with basic trendline support, and the break we made yesterday certainly shifted the focus to the downside. Also recall that the high that we came over for the month was at a major region of resistance too. This was the 1618 extension off of the lows, okay, for 2015. This was a basic 50% retracement off the highs that we made in July of last year. Big region, okay? And certainly after we made that reversal day, the focus shifted dramatically to the downside for Kiwi Dollar. The break that we made yesterday sort of solidified that. So you could get a little bit more of a probe back into former support before we move lower, but I'm inevitably looking for a drop towards 72.18. Just below 72.18, 72 handle comes the actual concerted 50 line. Let me zoom this out a little bit. For this formation we've been following for a couple of years now. It's off the 2011 high, the 2014 highs. You can see the median lines there catching some really nice plays. That 50 line, we broke above it earlier last month. We checked it as support. Now converges on that 50% retracement just lower. So 72, 72.18, sort of the main barrier of support I'm looking for on Kiwi Dollar. Here's what the scalp looks like on the hourly chart. And here's what we look like last night. Okay, so slight little rebound here. Again, like I said, keep that bearish invalidation level near term at 73. Still looking for short triggers. Momentum is still pretty bearish. You got nice breaks below 30, hold at 60. So everything still looks pretty well poised. Again, GDP release later today is going to be pretty important, especially with the major rebound that we're expecting to see. So maybe a really decent player heading to the U.S. close session today, guys, with the release coming out around 18:30, if I'm not mistaken, in New York. Here's the GDP release for tonight, 18:45. So for the release, an ideal scenario would sort of be a spike, maybe even into the weekly open, and then a reversal lower. But again, 72.18, channel support. On a deep stretch, 71.55 is a key 618 retracement of the advance. Sort of near-term levels I'm looking for on Kiwi Dollar. Any questions on New Zealand? Let me see what the near-term chart looks like here. Okay, some divergence into these highs, but it hasn't really materialized into anything major yet. Did get you a nice little scalp there, actually, in European trade, but see if we can get one more push into this key region of resistance. I'd be looking for, like I said, short triggers well below 73 in Kiwi Dollar. I would say so, Wes. Wes is asking, hi, Mike. So are you looking to fade the spike, I assume you're trying to say, on good GDP for Kiwi Dollar? So, Wes, from my standpoint, again, I do want to know when GDP is coming out. I'm not going to try to interpret good or bad. I want to see what the price action says. And that's always what matters with us. The only thing. We have a lot of discussions in here, guys, about the fundamentals and the underlying metrics. But at the end of the day, it's what price action says. So, Wes, I just say that because for one reason and a caveat. Guess what? GDP might absolutely take a dump. Might be horrible. But Kiwi Dollar could still fade rally into the highs. People who are short might be looking to close the positions. You get a run on stops. So even if Kiwi GDP comes out horrible, it still might spike higher in reverse. So I don't want you necessarily to stress better or worse. I kind of want you to look more focused on what price action's saying on the release. So To correct your statement, I would just say I would be looking to fade a spike on GDP. I don't care if GDP is good or bad. I kind of want to see what price action says first. Make sense? He says okay. But yeah, basically I want to see a continued hold below the weekly open here for a move into 72.80. If this pops, a quick retracement is going to be your best guidance, by the way. Oh, look at that. So a basic 236 comes right into that same zone. I don't want to clutter it up. I'm just showing you. 38.2 comes here. Don't necessarily need that. Okay. Not necessary retracement at this point because, again, we don't know that this is a concerted low. But if we do break this high, that retracement, those levels are the ones I'd respect as far as a little bit of a recovery play. All right, so that is New Zealand dollar. 1, 2, 3. That's number 4. Next up on tap, and the final update from yesterday's report was Euro Oz. Here's what Euro Oz looked like yesterday. So again, another trade I was trying to fade from the highs. Here's what Euro Oz looked like, or looks like now. The major premise of the trade is this basic region of resistance right here. So if you guys recall the previous update, I'm just going to jump into the previous update here from 9/11. Here's what the Euro Oz was look like. We were still looking to maintain an upside bias, but we noted this is a key region of resistance here, right? And if you looked at the daily chart, a break above this, we were looking for a rally into this critical area of resistance. So we were bullish earlier in the week. So if you're asking yourself, why were you looking bearish yesterday, or why were you in a short? Very simple. We were at a key resistance level. I got a decent trigger, looking for some near-term pullback. Obviously, it was lighter leverage on that. We booked profit pretty quick. We got stopped out in the rest of it. But this is why we were looking lower yesterday. And I still think this could offer some kickback, guys. You have the 200-day moving average. You have the 50 line, which, again, the closes is what important here, not necessarily the spikes. And just a region of which you'd expect to see some pullback. It's the same 50 line, by the way, that caught the highs that we made late in August. So I wouldn't be surprised to see some more kickback. Here's what it looks like on the hourly chart. Oops. And here's what we look like last night. Okay. Let's show you how that one turned out. Okay. So I have to grant you this, guys. The entry on this one was not very good from my standpoint. And the way I traded this, I guess this is a good kind of introductory briefing on opening ranges. The reason I took the trade was because not only were we coming off of that key region of resistance that we highlighted on the daily chart, here it is on the hourly chart, but you also got a basic session opening range break. So a quick review on that. When the markets come into the open of each trading session, a lot of times I'll look to trade the opening range. So the market will set a near-term high and low early in the session, maybe the first 45 minutes, first hour of trade. And you look for a break of that range to give you a near-term directional bias. So here's the Sydney Open in blue. Here's the Tokyo Open in dark blue. Again, you can get this indicator, guys. It's called Trade Sessions. You can get this from fxcodebase.com to include it if you're trading with FXCM. Just highlights the highs and lows for each session. But here's the open of the session, and here was the break. We tried to push through and test the Sydney Open. It failed, and the break. So bad entry, right? But my stop was just above the Sydney highs, so it still kept me within the 30 pip ATR that we're looking for. Okay? And that's kind of the rationale behind jumping into a position like this. We came off resistance. I didn't have the ideal entry off of that resistance, but we got an opening range break to Asia, look lower. So on that decline, on a 20 pip pullback here into the former weekly opening range high, I went ahead and booked some profit there, and it kind of just started to slither. I went to bed late last night, around midnight. I put my stop at break even. This thing took me out at stop just a couple minutes later before moving higher. This is the way you want to play reversals. You never want to get aggressive. If you miss a good entry, you're going to be stubborn and say, no, I'm going to put my stop against the high. And if you have a bad entry, now you're opening yourself up to a real sort of shellacking if this thing moves against you. So for Euro Oz, long story short, I think you can possibly rebound back into that 50 line again, maybe even show us some decent divergence for a pullback. But the broader trade stays constructive. I just think you can get a little bit more of a sluther lower off of that median line, just like we did earlier last month, before inevitably moving higher. Trade remains constructive above the 2016 open. That's 149.14. If we break higher, you're looking for a rally towards 151.70 and the upper median line parallel. It's actually a pretty clean setup still here for Euro Oz. By the way, Roy, I think you're the one who are new to the room today, right? Just want to remind you, Roy, there's actually a camera button in the top right-hand corner of your GoToWebinar screen. So if you want to take a quick snapshot of any of the charts that you see presented here, you can have that for later reference. It'll take a snapshot and save it on your desktop. How are you controlling your leverage on trade-by-trade basis? Like you keep saying, are you just taking smaller positions? Sharif, that's all it is. That's all it is you're taking smaller positions. And when I say controlling leverage or adjusting my leverage, it just means maybe taking a position off the trade. So again, just as a carte blanche, let's say I'm trading 10 lots or 20 lots on a position. I don't care if it's mini, micro, standard, whatever. Once I come into the first position or first level, maybe I'll take off, 2 of those lots, a quarter of the position, 3 of those lots, bring the stop to break even. As I'm going to bed, I don't want to leave too much risk on the table. I have my limit set. Maybe before I move off, I'll take off a couple more lots on the trade. So whenever I talk about adjusting your leverage or controlling your leverage, I'm just talking about just the sheer size of trade as per your account size. Does that make sense? Roy says, got it. Thanks. Yeah, cheers, Roy. Scott says, would you really expect a retest of the yearly open? Honestly, who asked that? Scott? Honestly, Scott, I really don't know. I was looking. Let me tell you this. My initial target on that scalp yesterday, like I told you, was right at the opening range high for the week. My secondary limit was down here. My stop was at break even, but that's what I was looking for as a limit on the pullback. So to answer your question bluntly, yeah, I think that would have been a great retest, and also a nice entry for the long side. But right now, I think you mutter here for a little bit longer. Maybe see some range-bound price action. Keep in mind, you are still marking divergence into the highs, right? Price action making higher highs, the oscillator holding those highs, or even slightly lower high here on that last peak. Sharif, not yet. We're going to jump into Aussie. Says, yes, sir, got it. You more than welcome. Okay, so Euro Aussie was number 5. Let's jump into Aussie dollar since everyone's also interested. Can we also look what's in store for AU? Wondering if we have any scalps on this pair. So I haven't personally taken anything on Euro Oz. I typically won't load up too heavily in any single currency, Sharif, since I was holding, and Roy, since I was holding Euro Oz last night. But here's what I got to say about Aussie. I'm still looking. Let me take one step back. I would love a drop into 73.80 for a long. Am I playing this short into 73.80? No. We're at support right here. If we break here, yeah, maybe look to sell a rally towards that region. But this is big for me. And I think there was a question here earlier on Aussie. Let me take a step back here. It was from Joel. Joel, are you still in the room? He says, hi, Michael. Can you give us a good idea for a longer-term Aussie when you run through? Thanks. So, Joel, here's what I'm looking for, man. This thing has been the cleanest. And I know for those of you in the room, you've heard me say this a million times, but it's been the cleanest of the daily dollar crosses. This median line formation has essentially just been textbook since last year's low, since the yearly low, catching the highs, really nice pivots, catching the lows, slope parallel, also governing those spike highs that we made last couple of months. So for me, this is huge. The lower median line parallel, the 200-day moving average, 6.8 retracement, highlights a region of 73.80 into the 74 handle. Okay, and this is an area of which if we drop into, I think would be like a godsend for a long position. Or at the same respect, our bullish invalidation level. If it breaks here, look for a drop all the way back into the yearly open. Not my favorite scenario, but I'm certainly looking for that drop to continue. Note that yesterday we did get a push kind of below 40 here, not the most convincing thing, but on the intraday chart, what we've done is basically break the weekly opening range. So again, on all the hourly intraday charts you'll see posted on my end, you'll see me always mark the weekly opens. Here's your weekly open. You set a low, you set a high, you broke the lows, you tested those opening range lows as resistance and moved off. Really keeps the focus lower, looking for a Thursday, Friday low. So Sharif and Roy, for those of you looking at the Aussie dollar, I'm still kind of favoring a move into like 73.80, 74 handle. Like I said, big region. I know I have this shaded region here, guys, but just to give you a little bit of color, not major fib levels, okay? These are just swing lows, both the swing low for 727 and the swing low for 705, just in the calendar dates. It may give you a little bit of a bounce. More so importantly, I'm looking at that 74 into 73.80 region right here. All right, so maybe I should just actually kind of remove that shade. Oop. Well, you get the picture. Aussie dollar looking for short entries then. So from a scalping standpoint, the focus does remain lower, Eileen. From an entry standpoint, I don't really know what I can do from here. I mean, the only entry that came about was this morning in European trade. That would have been a decent entry because of, again, basic slope support that we broke in red here, right? Checked it as resistance, coincide with that weekly low, 786 retracement. That would have been a decent short trigger. Looking to take some off the table here. Next downside target is in here. But to initiate new shorts, Eileen, from here would be kind of tough. Let's see what the scalp looks like. Yeah, I don't know if I'd be necessarily interested in trying to play a short from here. We're too close to support. I'd rather be looking for the drop, Eileen, to get long. Just my humble opinion. And it kind of bodes well with what we're thinking on Euro-Oz, right? So if Aussie dollar continues to move a little bit lower, that gives Euro-Aussie the opportunity to take one more stab at that high before moving lower. That's Aussie strength before Aussie finds support and again find some Aussie strength. So the kind of puzzle pieces are working pretty good here. Eileen says, yeah, I'm not seeing it, but wouldn't trust any turns here either. You mean a turn higher from here? Again, I want to see, let me take a step back. If we break back above 70, again, the weekly open, let's call it. If we break back above the weekly open, I'd invalidate this whole downside scenario and I'd start to look for a rally towards the upper parallels. But from here, yeah, I think the risk still is for that drop. If you're holding shorts, a stop against the high from last night and look for that drop into the 74 handle, I think is the best way to play this. Yes, I'm with you 100% on that one, Eileen. It says, so longs but lower down if signals. Yep. Or let's say, Eileen, remember tonight we do get those Aussie numbers for employment, okay? So let's say the employment numbers come out and you get a spike into this region, building divergence, maybe a scenario where this long trigger starts to come into focus. Maybe that might be a decent play. By the way, as far as the Aussie data is concerned, here's what we're looking for tonight. Australian employment is expected to gain about 15,000. Remember, you got a pretty decent read of 25.3 thousand last month. Everyone ran with that number except for the fact that the majority of it came by way of part-time jobs. In fact, full-time work contracted by 46,000 jobs last, I guess this was the July print. So it's going to be important to see the breakdown of how the Aussie data comes out. Again, if we continue to see a build on the part-time employment, that's not necessarily a good thing for the structural labor markets in Australia. So definitely watch that caveat, as well as the participation rate is always going to be a caveat when we're looking at the broader unemployment rate. All right, and that hits a little bit later after the RBNZ at 21:30 here in New York tonight. Okay, so that is Aussie dollar. Looks like it's stalling a little bit down here, but we're broadly looking for some basing while above 74. Next up on tap, British pound. I do see some questions here on pound. Eileen wanted to take a look at pound. Who else had a pound question here? Here's what sterling looks like. So you get the BOE on tap tomorrow morning. As far as the levels from the latest update on the pound, which was just here on the 12th, haven't changed, okay? Haven't changed. So here's what the pound looked like earlier in the week. No change to any of those levels. We saw that push and failure ahead of 33.70, come right back lower. We're now looking for that 31.55 level as support. I did add one level, although it's still here, the monthly open in purple. That coincides right now with an exact 100% extension off the highs. So that highlights 31.36, the monthly open and the 100 off the highs. So Eileen, yes, says sterling in the same situation. Exactly. Yeah, exactly. So I would love to see some support in this zone here, 31.36 into 31.55. I'd be looking for long triggers. Again, as far as UK data is concerned, you did get those numbers that were pretty mixed earlier today as far as the claimant count's concerned. Came in right at 2.2%. Jobless claims did uptick to 2.4 thousand. So not really a major play here. Tomorrow you do get retail sales figures from the UK and the BOE interest rate decision. So that'll be the real market mover here. From the sterling's part, barring any type of new measures from the BOE, which we're not expecting, I'd still be looking for a spike lower here to possibly offer some long scenarios. Look, at the end of the day, the daily chart's pretty ominous here. Okay, we talked about these levels earlier in the week. The fact that we broke below this key support has me really questioning whether we still should be bullish. The last ditch effort would be the monthly open. Okay, and that coincides with that level we just talked about on the near-term charts. 31.36, 31.35 here. So that's my last ditch effort. If sterling breaks below this level, I mean, there's a lot of room. There's a lot of room for this thing to fall apart. From my part, I'll be looking for long triggers as we get into this region here today. Questions on pounds. What would be the stop loss for the pound? If we get some long triggers off this region, Wes? Remember, we wait for the turn. Once we get that turn and pull back, the stop would be just against the lows, whatever the low turns out to be. If it's at this region, great. If it's below it, below whatever the low is. You want to give yourself a little bit of a cushion too, guys. When I say a stop against the high or a stop against the low, I'm not saying, put a stop against 34.44. No, give yourself a 3, 4, 5 pip cushion here. As long as you're maintaining your risk to reward ratio, give yourself a little bit more of a breather. Eileen says, well, and now the Brexit Article 50 is being mentioned, maybe fuel more shorts. Could be the play, Eileen. I'm not completely opposed to that notion. All I know is from a technical standpoint, 31.36 is my line in the sand. I don't have any open exposure personally on this, but if that breaks 31.36, not really looking to mess with it. Sharif, I'm glad you brought that up. He says, depending on how you draw that trend line on the daily, it looks like price action is testing old resistance as support. Yes. So if you guys notice, and I brought this up in the webinar yesterday, but I'll say it again here. If you guys notice on the hourly chart or my scalp chart, I have a different slope from the daily chart. This is just a basic clean trendline support, mirrored off the highs, caught the highs pretty well. This is more of a median line approach, and the reason I kept this on the scalp chart is because the slope on a near-term basis has offered a little bit more guidance in my opinion. If you take some parallels, you can see some really nice pivots. Okay, if you take another parallel here, caught the lows, we kind of been pivoting off that, and that slope is what converges on the 50 here at 31.55, and again the monthly open just lower at 31.36. So just from what near-term price action has been doing along this slope, I thought it prudent to kind of keep this in focus right now. But yes, I completely agree with you. If we look at this on the daily chart, it looks like you broke support, came back, tested as resistance, and moved off. But irrespective of this line, Sharif, look at this slope, right? This is just a parallel off of this slope. We broke below it, tested it as resistance, and moved off. So that's why I don't stress it. You know what I mean? If something on the near-term chart is giving you more guidance to what the intraday price action is doing, I'm going to stick with that. Does that make sense, Sharif? He says, yes, sir. All right, awesome. So we got a new low in place. Not going to stress that anymore. And let's see if Sterling can find some support just lower here towards that 31.36 monthly open. And Sterling was number 7. Okay. Next up on tap, we did go over crude. I want to touch base real quick on gold, as we do usually every day. Gold continues to hold below the low day close here that we made earlier in the month, which is 23 as near-term resistance. Still looking for a possible drop towards 1303. Guys, this trade is unlike crude, and I feel like, or that the technicals are suggesting to me that the momentum is starting to wane here. I mean, just putting things in perspective, I've seen a pretty precipitous drop here off of the highs for the month in just a couple of days. The break below the median line, in my opinion, I would have wanted to see this thing show a little bit more of a concerted, quick snap drop like you did on this break, like you did on this breach. So for me, I'm starting to get a little bit shaken, a little bit as far as holding short exposure from here. I think you could see a little bit of a rebound, but bottom line is, as long as you're below 1330, the risk remains for that move back towards basic trendline support, basic channel support off the lows. So no change to the outlook or levels here for gold. Again, actually, if you go to the intraday charts page, guys, all the way at the bottom, the radar charts for crude, gold, and the US dollar remain intact. So nothing changed as far as those levels are concerned. I see a question here on pound yen. Scott says if there's time. Sure, Scott. This is what pound yen looks like. It's funny because I was looking at this for a report yesterday, possibly to do on Daily FX, and this is what I came up with. I didn't have enough conviction to do anything about it, but I'm kind of kicking myself now because yesterday's rebound was ideal. This was a 1618 extension off of the lows at 34.45, literally caught the low. You had a nice little trendline support or basic parallel support just lower, which highlighted this support zone. The rally we were looking for, a pivot off of this median line extending off the high from the first of the month. Support, break, resistance, resistance. We came right into it. You had the monthly open there as well. Next topside target was the 50%, and we just missed that in overnight trade. So this is sort of the focus I'm looking for now. Look, for sterling yen, I like it higher, but it's been very hard to get excited about it over the last couple of days. Typically a pair that gives you a really nice ATR, nice wide range. A lot of people call it the dragon. It can really give you some decent trading opportunities. I don't like when price action does this. Now, the only thing I am sort of focused on in the near term, and why I was also looking for that long position yesterday, was basic slope. Trendline resistance, just off these 2 points. Broke, support, Yesterday's low was right there. So when I saw that rebound there, and then I saw that that had been the 1618 extension and just off slope support for the descending structure on building divergence. I mean, there's a million things to look at here yesterday. Coulda, woulda, shoulda. Long story short, for now, this is kind of the slope I'm looking at. I would need to see a breach above 3665 here to validate a breakout. The good part is this is now the weekly opening range high too. So for me, this would be sort of the breakout zone, and you'd look for continuation back towards the median line here in pound yen. Scott says, I got in on the second leg last night to 3640. Nice, nice, yeah, awesome. Yeah, that was another way of playing it, sure. I just don't know what to do from here because you're sitting just below the monthly open and the weekly open. So this is still going to be your near-term resistance. I know we sailed through it overnight, but this is still your immediate resistance. This is your breakout zone to validate the reversal higher. Any questions on pound yen? Scott, does that help? Does that answer your question on pound yen? It's sort of my near-term outlook right now. I'll do some more work on this chart here today. I might put out a piece later, and I'll tweet it if I do, but I kind of get shaded out when we start to straddle the monthly open. I think you kind of need a catalyst here to get going, and we do have BOE on tap tomorrow. So would you buy a short or long? Sushil, give me a, not sure what you mean by that. Buy it, or would you go short or long? So if we get back into resistance here, you're in the trend to you're not. If you find some short triggers up here, I'm actually might be a decent short. Everything I'm doing, this entire decline, I'm treating as a correction. Okay, I'd rather be looking for a bounce into support to get long. I can't tell you that I wouldn't take a short, and this is why, guys, I can't provide, trade by trade guidance because we're dealing with things as they happen, right? So if the market rallies into here and near term I get a short trigger, yeah, I might take a counter trend just like I did yesterday on dollar CAD. But my preference would be for this thing to break lower, and then you find a little bit more of a concerted support here to try to take a longer term stance on the long side. Make sense? He says, thanks. And more than welcome, man. Sharif says, do you look at indices, SPX or DAX? I absolutely do. I mean, let me know if you have any questions. I don't trade them intraday, Sushil, so not something I follow on a day-to-day basis. You're not going to find too many scalp charts on it. But something for sure, if you need to take a look at, do let me know. As far as the S&P is concerned, I mean, this thing's sort of a mess here. I'm going to leave this. I'm going to default this to Jamie later today with the midweek strategy webinar. I'm sure he's got a better gauge on this than I do, at least at this juncture from where we are. Whoops. So here's what the DAX looks like. I've been tracking that one a little bit closer, Sharif. So this median line formation that we've been following, I guess this is the lows from February of this year, has still continued to offer some pretty nice guidance. And the fact that we broke the 50 line here, which has continued to offer support over the last few months, in my mind, brings the focus back to here. You look at the 100-day moving average. You're looking at this longer duration trendline resistance, which extends off the high from 2015. And both of those converge essentially on the lower parallel in the 100-day moving average right around here later in the month. So the major resistance you need to get through is still going to be the high day close that you made back last month. That's 10-730. So resistance. And I would also, at this juncture, just take a quick reference on what this retracement looks like. Okay. So you also have the 50% retracement right in there as well. A breach of the highs, that's simple. You're looking for 10,953, 10,983. That's the next major region. This is huge up here. It's a 618 extension, 100% extension, 2 equal legs off the low, confluence with the 618 off the high. My favorite convergences. Okay, Sharif, I'll take a look at the SPX for you and have something for you tomorrow. Again, keep in mind, Jamie, later today, I don't have anything set up for you on that, so I don't want to just throw out random levels for you right now on the SPX. Dollar yen, are you still looking higher if it stays above 102.60 or your bias has changed, Conwell? Here's what dollar yen looks like from my part. On the daily chart, I still do look, well, let me say this. I have us at resistance right now, okay? That's the bell, so I do need to run here, guys, but this is what I'm looking at. 50% retracement of the decline off the highs that you made here comes in at 103.53. You also have the monthly open is literally just below that. The monthly open comes in at 103.42, okay? And the exact median line for the broader structure that we've been in over the last couple of months also converges here. So I do expect you could get some kickback. Largely speaking, I would like to buy that kickback. Here's what the hourly chart looks like, okay? And again, on its face value, in my humble opinion, your weekly opening range low came into support. We highlighted this last week. Here's what dollar yen looked like back on the 7th. Okay, we came right into that 618. That's continued to hold as support. One more test here, a break of the weekly opening range high in the weekly open. We tested it as support. Continues to put the region, continues to put the focus, near-term support right here. Key resistance still up here, and that's the breakout zone. Okay, if it breaks sub 102.60, I'm kind of neutral. You're probably going to see this thing continue to chop. Okay, but the levels remain unchanged. Here's what the 2-hour chart looks like. Okay, so feel free to take a snapshot of that if you need it. At what level is a good buy? I mean, if we get into 160, again, it's not about the levels, it's about what near-term price action is doing, right? So if I get into 102.60 and I get a decent long trigger, I would have been interested in taking a long position. But for me, this would be in a more ideal region, I think, against the low here, against this low to try to get on another rebound higher. Guys, you know my feeling on the dollar yen. I don't really like intraday trading this unless you have a clear-cut directional bias. Do you know what I mean? The last time I traded dollar yen was on this breakout, and we talked about this at length when it happened. Okay, this was back in mid-August. Nice consolidation that lasted a few weeks. You had some divergence into the lows. You had a clear-cut break of the weekly opening range high, the highs, or the weekly open, structural resistance. This is a clear trade I loved trading. This chop here is an easy way to get really chopped up on dollar yen, which inevitably in and of itself doesn't have a decent ATR. So for me, my attention is elsewhere. You know, I'll look at pound yen. I'll look at, you know, even euro yen is going to be something in the focus, I guess, soon enough. But that's what I'd be looking at. All right, guys, I got to wrap it up here and run. As always, a pleasure being with you. We'll be back tomorrow here at 8:30 Eastern for another intraday strategy webinar. Don't forget, Jamie's up at 1 o'clock. Wes says pound at 131.50. Yeah, wait for the open, Wes. Guys, when the U.S. market opens, a lot of times after we close this webinar, you get those stretches into the exact levels that we're looking for. So wait for the 9:30, 10:30 stretch here to get out of the way. See if we can't make that probe lower in pound. Maybe make that probe higher in dollar CAD and some of the other crosses that we've been looking. I'll see you all tomorrow morning. Catch Jamie at 1 p.m. Cheers, guys.